I'm Chad Johnson, a student at the University of Kansas. I'm studying communications with a minor in business.
Caroline Johnson. I'm a student at the University of Kansas, and I'm majoring in psychology with minors in business and French.
My name is Ryan Johnson, and I am majoring in exercise science.
Hi, my name is Renee Masawi, and I'm a pre-med student at KU. Today, we're looking to invest in one of the biggest sporting brands in the world, Nike. Nike was founded by a University of Oregon track athlete by the name of Phil Knight and his coach Bill Bowerman in January of 1964. It was originally named Blue Ribbon Sports. Nike produces sport equipments, athletic and recreational products, and not to mention their famous apparel and athletic footwear. In fact, footwear revenues account for 53.8% of Nike's total revenues. They're the world's largest athletic shoe maker. Sorry, Adidas, even Kanye couldn't help you there. Their largest geographical regions are North America, Western Europe, Eastern Europe, China, and Japan. But Nike can be found pretty much everywhere.
Everywhere?
Everywhere.
So I'm going to talk a little bit about the balance sheet of Nike. So their current assets, they have a lot of current assets to date. Their current asset total is $21.6 billion as of 2015. So Nike makes ongoing estimates on their accounts receivable, and they maintain an allowance for the estimated losses resulting from the inability of customers to make required payments. In determining the amount of the allowance, Nike considers the historic level of credit loss and also makes judgments about the creditworthiness of significant customers based on ongoing credit evaluations. It makes sense for Nike not to have a specific amount of uncollectibles due to them rarely needing to collect on receivables. Their intangible assets totaled at $281 million in 2015, and those intangible assets include trademarks like the Nike swoosh, the Jumpman, the Hurley logo, and also the Converse logo. So Nike's current liabilities in 2015 was $6.3 billion, and some examples of those liabilities would be notes payable and also accounts payable. About $5 billion was in 2014, so this amount may be more in 2015 due to the company's growing and needing to buy more materials, causing tax payables to increase. The accounts payable will also affect current liabilities due to constant purchasing of goods from suppliers. Debt totaled to be about $1.079 billion. Their stockholders' equity totaled to be about $12.7 billion, and their retained earnings was $4.68 billion. The retained earnings just represents the corporation's cumulative earnings that have not been distributed to its stockholders. So Nike's gross profit in 2015 was $14.06 billion, and in 2014 was $12.44 billion. So it rose almost $2 billion in 1 year. The gross profit ratio in 2015 was 46%, and 2014 was 44.8%. So the gross profit ratio just shows the proportion of profits generated by the sale of products or services before selling and administrative expenses. The earnings per share in 2015 was $3.08, and in 2014 was $3.05. Earnings per share is just a portion of a company's profit allocated to each outstanding share of its common stock. The price per earnings ratio is 15.66, and this indicates the dollar amount an investor can expect to invest in Nike in order to receive a certain amount of the company's earnings. Cut that shit. So Nike uses the direct method of presenting on their balance sheet in their cash flow, and also two examples of their cash flow activities include depreciation, which represents the depreciation of machinery for making rubber soles and stuff like that, and also dividends, which represents the amount paid to shareholders who invest in Nike. That's it.
All right, now I'm going to talk about a couple accounting policies. First off is the recognition of revenues. Revenues are recognized or recorded when products have been delivered or services have been performed for the customer. Products or services have yet to be awarded to the customer go under the category of unearned revenue. Thus, when the customer is awarded, revenue increases as unearned revenue decreases. However, revenue is reduced when taking into account the factors of sales discounts, returns, and other miscellaneous claims. As of May 31st, 2015 and 2014, Nike's reserve balances for post-invoice sales discounts, returns, and miscellaneous claims were $724 million and $610 million, respectively. Next are property, plant, and equipment. Property, plant, and equipment are recorded at cost. Nike saw additions to property, plant, and equipment to be $3.01 billion in 2015 compared to $2.8 billion in 2014. Lastly is depreciation. Depreciation is calculated using the straight line method, not to get confused with the accelerated method, for buildings and leasehold improvements over 2 to 40 years and machinery and equipment over 2 to 15 years. Total depreciation came to be $606 million in 2015 and $518 in 2014.
The two types of notes that we looked at for Nike were long-term debt and goodwill. In terms of long-term debt, Nike decreased their total long-term debt from the year 2014 to the year 2015. In 2014, they were at $1.2 billion of long-term debt, but by the year 2015, they had $1.079 billion in debt. As for their goodwill, their total goodwill for assets remained fairly the same from 2014 to 2015 at about $131 million. And for their intangible assets, it decreased from 2014 to 2015 to $281 million. A lot of their most important intangible assets are related to their trademark, and their goodwill is basically just their acquisitions of other companies and their spending more than the actual value of something because they believe that it will produce more of a future profit for their company. So we looked at a lot of things within Nike's company, and we decided that we would definitely invest in this company because it's just a very well-known company. It's very stable. It's got really great products and has a lot of good financial stability.
Another thing to look at is that their long-term debt significantly decreases about over $2 billion from last year, and their total revenues also increased about $3 billion this year, so that's pretty significant.
Their price per earnings ratio is also 27.5%, which is above the average price per earnings ratio for companies, which means that their investors are expecting very high growth for the future.
So would we invest in Nike?
Yes.
I think we would definitely invest in Nike.
I think we would too.